Estate Tax Return Form 706 is a critical component of estate planning and tax management. For those preparing for the CFP exam, mastering the intricacies of Form 706 is essential. This form is used to report estate taxes to the IRS, and understanding its requirements can significantly impact estate planning strategies. Let's delve into the key aspects of Form 706, focusing on filing and payment deadlines, penalties, and common mistakes to avoid. Firstly, it's important to note the filing and payment deadlines associated with Form 706. The form is due 9 months after the decedent's date of death. This timeline is crucial for exam takers to remember, as missing this deadline can lead to significant penalties. An extension to file can be granted for an additional 6 months, but it's vital to understand that this extension does not extend the time to pay any taxes due. This distinction is a common pitfall for many, as they mistakenly assume that an extension to file also extends the payment deadline. Penalties for failing to file or pay on time can be severe. The failure to file penalty is 5% of the tax due for each month the return is late, up to a maximum of 25%. On the other hand, the failure to pay penalty is 0.5% of the unpaid tax for each month the tax remains unpaid, also capped at 25%. A critical point to remember is that if both penalties apply, the failure to file penalty is reduced by the amount of the failure to pay penalty. However, this reduction does not increase the failure to pay penalty. This nuanced rule is often tested in the CFP exam, so understanding it thoroughly is essential. Common mistakes in handling Form 706 include missing deadlines and assuming that filing extensions cover payment deadlines. These errors can lead to unnecessary penalties and complications. To illustrate, consider an example where an estate tax return is filed 3 months late and the tax is paid 2 months late. In this scenario, the failure to file penalty would be 15%, 5% per month for 3 months, and the failure to pay penalty would be 1%, 0.5% per month for 2 months. The failure to file penalty would be reduced by the failure to pay penalty, resulting in a net failure to file penalty of 14%. This example highlights the importance of timely filing and payment to minimize penalties. Another example involves an estate tax return filed 6 months late with the tax paid 6 months late. Here, the failure to file penalty would reach the maximum of 25%, and the failure to pay penalty would be 3%, 0.5% per month for 6 months. The net failure to file penalty, after reduction by the failure to pay penalty, would be 22%. These examples underscore the financial impact of missing deadlines and the importance of understanding penalty calculations. In conclusion, mastering Form 706 is crucial for CFP exam success and effective estate tax management. Remembering the filing and payment deadlines, understanding the penalties, and avoiding common mistakes can save significant costs and ensure compliance. As you prepare for the exam, focus on these key aspects and practice with examples to solidify your understanding. This knowledge will not only aid in passing the exam, but also in providing sound financial advice in your professional career.